What's up guys, in today's video we're going to be doing a little bit more of a casual video today, and we're actually going to be diving into some of the key highlights from the 2021 Berkshire Hathaway annual shareholder meeting. As we all continuously strive to make a return on investment and actually make money in the stock market in the quickest way possible, sometimes we can lose sight of some core investing principles. So in light of that, I think it's always useful to listen and learn to two of the best in the business. So let's listen to some of the thoughts in which both Warren Buffett as well as Charlie Munger had during a shareholder meeting. Now this video might be a little bit all over the place, jumping from topic to topic, but hopefully you guys find it really insightful to listen to some of the investing wisdom from these two great investors. Now before we jump into it guys, as always, my name is Mitch. I post all kinds of videos on investing and the stock market. If you do enjoy content like that, hit that big red subscribe button down below as well. Drop a like on the video guys, really helps out the channel. With that being said, let's dive straight into it. So the Berkshire Hathaway 2021 shareholder meeting ran for about 5.5 hours on a live stream on YouTube. But in today's video, we'll look at some of the key highlights which actually came from the kind of question and answers section, which I think you could probably find most value in. So the first question actually came from one of Berkshire Hathaway's long-term shareholders who said, after a 15-year period of market underperformance, given this, what is the arguments of long-time shareholders to continue to hold the stock versus diversifying their risk across an index? Now, I did take a quick look at the context behind this question because I wasn't 100% sure that it was accurate. So, Berkshire Hathaway's stock performance over the course of the past 15 years has been 358.3%. whereas the S&P 500 as an index has been 224%. Over the past 5 years, on the other hand, Berkshire Hathaway has slightly underperformed the S&P 500, returning just 90%, as opposed to the S&P 500, which has returned 103%. So it looks like it runs in ebbs and flows just a little bit, and I'm not quite sure what it's meant by the underlying term as the market on the whole, whether that's the S&P 500 or a collection of other markets. But nonetheless, Berkshire Hathaway don't look like they massively underperformed the overall S&P 500 anyway. So let's take a look at the responses from Warren Buffett as well as Charlie Munger.
I personally prefer holding Berkshire to holding the market. So I'm quite comfortable holding Berkshire. I think our businesses are better than the average in the market.
Now, I think that's a really interesting quote from Charlie Munger and a key piece of insight into his own investing philosophies. Berkshire Hathaway invests into businesses. Now, that seems like quite an obvious thing to say, but I think sometimes we can get a little bit carried away with looking at the previous historical price performance of a stock, as well as just purely looking at stock price in order to define our investment decisions, rather than actually looking at the underlying fundamentals of that business. I think it certainly emphasizes the point here that to not just make investment decisions based on the previous historical performance of the stock, but based on the quality of the business you're investing in instead. Now, further to this, Buffett also chips in with his response to the question.
I recommend the S&P 500 index fund, and have for a long time to people. And I've never recommended Berkshire to anybody because I don't want people to buy it because they think I'm tipping them into some side. Never. I mean, no matter what it was selling for. And you know, I've made it public. On my death, there's a fund for my then widow, and 90% will go into an S&P 500 index fund and 10% of treasury bills.
Now, interestingly enough, Warren Buffett has said this in many interviews in the past about the average person should literally just buy and hold an S&P 500 ETF. And it certainly makes total sense, with the average annual rate of return for the S&P 500 being about 9 or 10% per year over the course of the past 100 years. I personally think the key to investing is having patience with your return on investment. Let's say, for example, you had a £1,000 amount in order to invest into the stock market. And let's say after year one, you're able to generate that 10% return. Well, the reward and the upside would only actually be a £100 return on investment. And for many, that's not enough reward to even consider the long-term implications of cost averaging your way into the market, as well as compounded growth too. But when you do start to consider the longer term implications of both cost averaging your way into the market, as well as letting the compound effect do the work for you over a 10, 20 or 30 year period, you can generate a serious amount of wealth. Now, I guess there's another school of thought here that you don't have 10, 20 or 30 years to wait in order to generate a sufficient amount of wealth from investing into the stock market. And instead, you could dump all your money into a special purpose acquisition vehicle, or for sure a SPAC, and get a 1000% return over the course of the next 12 months. And I guess that's where your appetite for risk certainly comes into play. For some people, that will be a wise investment decision to have some speculative investments. Some people will literally just go all in on the speculative side of things. For me personally, I like a little bit of a balance. Yes, I've got a couple more speculative stocks within my investment portfolio, but generally speaking, I still have a large amount of exposure to an S&P 500 ETF, as well as some top quality stocks as well. Now, on that note, Buffett also talks about investing in individual stocks. So let's take a listen to what he had to say.
I do not think the average person can pick stocks. We happen to have a large group of people that didn't pick stocks, but they picked Charlie and me to manage money for them 50 or 60 years ago. So we have a very unusual group of shareholders, I think, who look at Berkshire as a lifetime savings vehicle, and one they don't have to think about, and one that they'll look, if they don't look at it again for 10 or 20 years, that will have taken care of the money reasonably well. I think that a person who doesn't know anything about stocks at all and doesn't have any special feelings about Berkshire, I think they ought to buy the S&P 500 index.
So a couple of key points to call out here. Firstly, Warren Buffett said that simply the average person can't pick stocks. And to be honest, guys, statistics certainly run in support of that view from Warren Buffett, with 96% of mutual fund managers failing to beat the S&P 500 average return on investment. He then goes on to talk about investors who simply do not know what they're doing, and he said that their best bet is to simply invest into an S&P 500 index fund. And I think this pretty much goes back to the original point in which Warren Buffett made, and that is that the best option for the average investor is to simply buy and hold a low-cost S&P 500 index fund. It certainly takes away all of the need to actually know and learn the underlying fundamentals of the businesses in which you're investing into. Likewise, you don't need to go and scroll through and trawl through lots of different financial statements, from profit and loss accounts to balance sheets to cash flow, amongst other things. Now, speaking from experience, when I first started investing, I simply opened a Vanguard UK account and started investing into an S&P 500 ETF, as well as a life strategy fund as well, which is simply another type of diversified fund. Now, that wasn't necessarily because I couldn't read financial statements. In actual fact, we covered it off to death whilst I was at university, and I'd read countless amounts of books before I even invested a single penny into the stock market. But at that point in time, when I first started investing into the stock market, I just wanted to dip my toe into, a well-diversified fund. And to do that, the S&P 500 ETF seemed like a perfect option. Now, obviously, everybody has their own approach and their own risk appetite, but I think Buffett's words are wise for the vast majority of investors. Now, the next question was around a hotly contested topic about how overvalued the stock market is, and whether we're actually in a bubble, and whether we should actually hold our money in cash and wait for prices to come back down to fair value.
We've got probably 10 to 15% of our total assets in cash beyond what I would like to have, just as a way of protecting the owners and the people that are our partners from ever having us ever get in a pickle. But we've got more than we've got probably 70 or 80 billion, something like that maybe, that we'd love to put to work. But that's 10% of our assets roughly, and we probably won't get a chance to do it under these conditions. But conditions change very, very, very rapidly, sometimes in markets. And
now, I think we can certainly translate Berkshire's strategy into our own investment strategy based on the current market conditions in which we're faced with. Berkshire holds, as Warren Buffett said, roughly 10 to 15% in cash currently, which translates to about $70 billion US. Now, that's certainly interesting to hear Warren Buffett say that he still feels like he should have this money working for him, but currently it's sat in cash and simply waiting for better market opportunities to arise is what I can assume from that statement. And there certainly sounds like they're waiting to invest that money when better prices are available. And that's certainly something that I've actively looked to do and translate into my own personal investment strategy, and that's not to invest every single penny I have into the stock market right now when the stock market is at absolutely all-time highs. Instead, yes, I've been cost averaging my way into the market, but I've also been mindful to keep a little bit of cash back for when we do eventually see, if we do eventually see, but I'm sure we will get one at some point, a potential stock market crash, because that way I'll be able to put more money into the stock market and really capitalize from falling prices. Because as the old saying goes, you want to make sure that you've got cash ready for the crash, because you don't want to miss out on all of the best opportunities because you've simply invested all the money in which you have whilst the stock market was at all-time highs. Because as Warren Buffett also said, market conditions can change very, very quickly, and we saw that back in March last year when we went from all-time highs down 32% being wiped off the total value of the stock market in less than 6 weeks. So it's always wise to keep a little bit of money back, keep some cash buffers in place ready for when better stock market opportunities present themselves. And finally, we couldn't finish this video off without obviously referencing one of the polarizing investment topics as of late, which is obviously cryptocurrency. So let's see what Charlie Munger had to say about it.
Those who know me well are just waving the red flag of the bull. Of course, I hate the Bitcoin success. I don't welcome a currency that's so useful to kidnappers and extortionists and so forth, nor do I like just shuffling out a few extra billions and billions and billions of dollars to somebody who just invented a new financial product out of thin air. So I think I should say modestly that I think the whole damn development is disgusting and contrary to the interests of civilization. And I'll leave the criticism to others.
I'm all right on that one.
And I think we'll leave the cryptocurrency debate there. For me personally, I hold a small percentage of my overall investment portfolio allocation in cryptocurrency. That's a personal choice of mine. The likes of Charlie Munger and Warren Buffett are clearly not interested in cryptocurrency at all. But nonetheless, I've used it as an opportunity to invest in something a little bit more speculative based on a potential big innovative move which could completely change the financial infrastructure of the future. And so because of that, I think it's worthwhile for me personally at this stage in my life, taking a little bit of a risk on a more speculative investment and simply seeing how it plays out. So with that said, guys, I hope you found this video useful. For me personally, I always find it insightful listening to some of the investing wisdom from two of the best in the business in Charlie Munger and Warren Buffett. So I hope you guys did too. And as well, guys, if you did enjoy the video, be sure to drop a like on it, subscribe to the channel if you're new around here. And with that being said, I'll see you over in the next video.